Hey students, welcome to week 4 of Accounting Principles. I hope your week is going well. Be sure to check out the assignments, the participation exercises, and the discussion questions to make sure you know when they're due. And you can find that out in the syllabus. Just make sure we hit those dates, all right? I appreciate the work that you guys are putting into that. And your answers are very thoughtful as I'm reading them, not just the mathematical answers, of course, but the written answers. I can tell you're reading the material. Listen, if you're struggling with the math in this course, speak up, and speak up now. The mathematical concepts only get more difficult as we go on from here, both in this Business 221A and Business 221B, the next 8-week course that's coming up. And then also after that, if you go on and take, I think it's Business 222, the next version of accounting principles. So if you're struggling, get with me. Now, we can struggle through it together. I'll help you. We can work on some alternative questions and some different math problems. The thing is, accounting really is just a bunch of addition and subtraction, but it's the model behind it that can make it difficult. So get with me, and we can work our way through that, okay? I don't want you to struggle too mightily with that. Look me up, and I can help you. Let's talk about week 4 for a moment, the week that's coming up. This week, during week 4, we're looking at the users of accounting information and the connection between that information and business goals. Business activities and performance measures are all kind of connected to the accounting world and the accounting reports. We're also going to do a little bit deeper dive into the importance of ethics in financial reporting. Now, I know that we've touched on ethics, I think, almost every week since we've been meeting over the last few weeks, but we're going to go into more of some of that this week. And speaking of ethics, a few weeks ago, I watched a documentary on Netflix. It was about the company called Enron. Enron isn't around anymore. Worth the watch if you have the time and the access to Netflix. After watching that documentary, you'll have a much better understanding of why changes to GAAP are necessary as time goes on and new companies figure out new ways of cheating and being fraudulent. GAAP has to change and the laws have to change, all right? But also, watching that documentary gives you a pretty good feel about why ethics are important as well. And we know from a biblical perspective why ethics are important, but especially in the business world, there are so many different ways to bend and twist rules and make money. And the folks at Enron did that, and they did it at the cost of a lot of people's retirement accounts. So if you get a chance, watch that. From chapter 1, ethics is the code of conduct that helps individuals in their everyday life distinguish right from wrong. Again, we have the Bible to tell us what's right and what's wrong. But ethics in a society, oftentimes ethics will ebb and flow. The boundary of ethics will change and they'll shift, unlike a biblical standard, okay? And so, especially in the accounting world, ethics is especially important in preparing financial reports because users of those reports must depend on the good faith, if you will, of the people involved in the preparation. The intentional preparation of misleading financial statements is called fraudulent financial reporting. It can result from the distortion of records, falsified transactions, or the misapplication of various accounting principles. Again, watch that documentary I mentioned about Enron, and you'll see a real-life world example of that. And it rocked the business world back in the early 2000s. In fact, in 2002, Congress passed the Sarbanes-Oxley Act to regulate financial reporting in public corporations. This legislation, you may, in your time period here, on Earth, since you've been born, you probably didn't even know that there was a time when public corporations weren't highly regulated like this, but they are definitely now since 2002. A lot of that has to do with Enron. This legislation requires the chief executives and the chief financial officers of all publicly traded companies to attest to the accuracy and completeness of the quarterly statements, the financial statements, and the annual reports that their companies file with the SEC. Again, lack of honest reporting can lead to fines and jail time. Anyways, read about it in chapter 1. All right, let's switch gears and talk for a moment about the 3 groups who use accounting information. First group is management. The second group, outsiders with a direct financial interest in the company. And then the third group are outsiders with an indirect financial interest with the company are the third group. Let's talk about each one of those briefly. If a business is to survive, management, the first group, must achieve profitability and liquidity. You can find those definitions in the book after you listen to this and look up profitability and liquidity. And liquidity. For sure, the company also has other goals, such as improving its products and its expanding its operations. But management directs the company towards these goals by making the right financial decisions with those reports. So the management is one of the users of those financial reports. The second group are present or potential investors, kind of like private capital investors. And including that second group are creditors, people like banks and lending institutions. This group the second group is considered outside users with a direct financial interest in the business. Investors use financial statements to assess the strength and weakness of the company before they invest in it. And creditors, examine the financial statements to determine the company's ability to repay loans at the appropriate time. That third group that I mentioned, now they're a little bit different. Society as a whole, through its government officials and public groups, and that's the third group of users of financial information, is the government officials and other public groups. They may be viewed as a financial statement user with an indirect financial interest in the business. Specifically, society includes, groups like tax authorities, the IRS, for example, regulatory agencies like the SEC, labor unions, and financial analysts, just as an example of indirect users of financial information. Managers in government and not-for-profit organizations such as hospitals and universities and charities and professional organizations like that also make extensive use of financial information. In addition to financing, investing, and operating activities, these organizations have responsibilities to authoritative bodies that hold them accountable for their financial performance. Listen, let's take a look for just a moment about the business goals and the activities that you can assess as part of your financial review of those financial documents. If you could give a generic description of a business, what would it be? How would you describe what a business is? Well, if you haven't thought about that before, check out Chapter 1, because there's an answer in there I think it's worth noting, worth remembering. Here's what Chapter 1 says. They say, a business is an economic unit that aims to sell goods and services to customers at prices that will provide an adequate return to its owners. Let me read it to you again. This is what a business unit is. A business is an economic unit that aims to sell goods and services to customers at prices that will provide an adequate return to its owners. Adequate return to its owners. The two major goals of all businesses are profitability and liquidity. Here's a quick definition. Again, you can read more about this in the text. Profitability is the ability to earn enough income to attract and hold investment capital. All right, and you can look at profitability right off that net income statement that we've been looking at over the last few weeks. Liquidity is the ability to have sufficient cash to pay debts as they fall due. Businesses pursue these goals by engaging in three different activities. Okay, so once again, the two goals are for any business are profitability and liquidity. And here's how those goals are achieved. There's three activities that businesses all engage in to achieve profitability and liquidity goals. First, the first activity is businesses engage in operating activities, which includes selling goods and services to customers. They employ people and managers and workers, and they buy and produce goods and services. Those are operating activities. The second activity that businesses engage in is investing activities, which involves spending the capital that you receive as a company in ways to help achieve its objectives. So you might be investing in buildings and equipment and that sort of thing. Okay. And finally, businesses pursue their goals, those goals of profitability and liquidity, by engaging in this third activity called financing activities, which include obtaining funds to begin and sustain operations. That might, for example, be borrowing money from a bank would be a financing activity. So again, businesses pursue those goals of profitability and liquidity by engaging in operating activities, investing activities, and financing activities. In the area of financial analysis, uses those financial statements that we've been talking about the last couple of weeks to determine how well a business is managed, to understand how those goals are being achieved, to understand how those activities of operating, investing, and financing are going. How are they doing at that? So, an important function of accounting is to provide performance measures, which indicate whether managers are achieving their business goals and whether the business activities are being well managed. Financial ratios that we'll get into in later chapters can provide information on both how financial statement items relate to each other and allow for comparisons, from one period to the next. Okay, I think that's good for now. That's an overview of week 4. Make sure you read the details in chapter 1, sections 8 and 9. If you haven't read chapter 1 yet, now is the time to read it, because after this week, we're done with chapter 1. We're going to move on to chapter 2. Finish up chapter 1 this week. Okay, I'm available during virtual office hours on Tuesday evening at 6 p.m. Mountain Time. Contact me with questions and have a great week. Remember, God is on his throne. He's always been there, and he always will be.